Hey everyone, my name is Jason Scott. I'm a mortgage broker with TMG, the mortgage group in Edmonton. So, do you have a trigger rate? Do you know what a trigger rate is? Well, a trigger rate is for people who have variable rate mortgages. So a little bit of background, there's two types of floating rate mortgages. There's adjustable rate mortgages where your payment changes either up or down depending on interest rate changes, or a variable rate mortgage. And that's a mortgage where your payment stays the same, and if your interest rate goes up or down, more or less money goes towards interest versus paying down the principal. So we've had 3.5% worth of rate hikes so far this year. And if you have a variable rate mortgage, you probably are hitting your trigger rate, which sounds really scary, and it can be actually. So what'll happen is the bank reaches out to you and says, hey, your payment isn't covering enough of the interest, never mind covering off any principal repayment. And so what happens is you have to increase your payments or make a lump sum payment. Now, obviously, for people with big mortgages, this can be a real big financial strain. And there's been some talk in the media about how lenders are reaching out to people and saying, look, we'll work with you. You know, we can add some of the interest costs to the back end of the mortgage. Obviously, that's not ideal. You know, you'll end up owing more and ultimately paying interest. If you have questions about your mortgage, I'm happy to help you out. Maybe it makes sense to convert to a fixed rate. Maybe it doesn't. It really depends on who your lender is, what the payout penalty will look like, how you feel about locking into rates when we're kind of at 15-year highs for fixed rates. But always happy to have a conversation and see if I can help you out. Jason Scott, TMG, the mortgage group.